Hi everyone, hope you're all doing well, and today we're going to talk about UK tax on stocks that you make gains on. So this is something really important because the last thing you want to do is make a really good investment and then not know how to benefit yourself from the tax system that's in place, because the tax system that is in place for stocks, if you're from the UK, is actually really generous and not many people know about it. So we'll be talking about this today, make it nice and easy, because I feel like it's something that looks really confusing, but actually when you get into it, it's actually quite easy to understand. And then you start looking and you're like, okay, this actually is a pretty good thing to invest, because the benefits of investing and the benefits of that, you don't actually lose that much money that you make compared to if you went to your normal day job, 9 to 5, you get taxed quite heavy on your normal day job. But it takes a while for tax to actually kick in on investments if you're from the UK. So obviously the first thing is that you probably started investing, you're making some good gains off the stock market. One thing that the problem is with the education system in the UK right now is that we don't really get taught how good investments in stocks actually are. And then after you make them really good investments into the stocks, you don't get told how much in favour the tax system is for you if you invest into stocks. So there's two massive errors that don't happen in the education system. But the first one, you've conquered it, you probably invested in your stocks, you made some nice gains. Next thing, let's take some profits off there. Where do I stand with my tax? So we'll go through here and I'll show you what good habits, even if you're not over the threshold of paying tax, that you want to start getting into, because it will be very soon that if you keep investing monthly into your ISAs or into your stockbroker and you're making nice gains, that at some point the tax will start to play a part of your investments and you'll have to start thinking about it. So this is the most up-to-date thing. There is rumours that it could change. There's rumours that they are looking at maybe trying to recoup some of the funding that they put in place because of the CV over the last few months through investments, through stocks and shares. So just be really careful of that. At the moment this is up to date, but it might change, but we'll go through everything here. So first of all, if you start investing, the main thing you want to start doing is using one of these, an ISA. An ISA is a brilliant way not to have to pay tax on your investments. So I didn't really realise until a few years ago the benefits of having an ISA, and if you invest in stocks, how much and you need to do it. It's essential. This is the first thing you want to be doing. So the first thing you want to be doing is you want to be opening a stockbroker's account, and when you're opening an account and you're using stocks and shares and you're buying things, you want to be buying them in an ISA. Now an ISA you can open up with, at the moment, Free Trade and Trading 212. Trading 212 are currently not accepting any new clients at the moment, but at some point they should come back. But Trading 212 and Free Trade, so you're probably looking at Free Trade. If you want to join, the link's in the description. You also get a free share. If you join through Free Trade and open up an ISA, that's the best thing you can do. You get 20,000 every tax year, and in that 20,000, if you go buy shares and stocks every year, whatever you buy, when it comes to selling it, if you're up 50%, 100%, 150%, you don't pay a single penny in tax. So you want to be really maxing your ISA out in your year of investing before you touch any other stockbroker's account. So that's the number one priority right there. Tax free, open up an ISA, start buying shares in your ISA, get to 20k a year, don't worry about any tax. That is the main priority, so that's where you want to be going first. Now it does get a little bit different after you max your ISA out. So after you max your ISA out, then we start getting a little bit more detailed, because you're investing more than 20 grand a year. If you're investing more than 20 grand a year, we're going to start thinking about this, capital gains tax. Now capital gains tax is different from your income tax. So when you think about you go to work, you earn money, that's a different tax to capital gains tax. Capital gains is basically you've invested in something, you've made profit, you have to pay on it. Now at the moment, there's a capital gains tax allowance of 12,300. Now up to 12,300, you do not get taxed on that amount. Only until you go after or over 12,300 is when you get taxed. So if you were to invest into Greg shares that were not in your ISA, then these could come under the capital gains category. So if you invested in 5,000 into Greg's and they went up 5,000, you now have 10,000. Now the first 5,000 doesn't get taxed because that's your original investment. The other 5,000 tax that you made in profit can get taxed. Now that 5,000 goes against your capital gains. So if you haven't used any of it up at the moment, that is fine and it won't get taxed. But that 5,000 will take your capital gains allowance for that year now down to 7,300. And if you were to do another 5,000 profit, that would take it even lower, down to 2,300. And then if you were to have another 5,000 profit, that's when you would go over your allowance, and that's when you'd start getting taxed. So it is important to remember that you only get taxed on when you sell the stock as well. So if I'm still planning to hold Greggs even longer than what I'm currently up and not click sell, I don't get taxed. It's only when you do click the sell button on that stock, then your 5,000 profit will get taxed from there. It's also really important to say as well that the ISA and capital gains allowance get reset in April. Now, the current capital gains tax is that if you are on the basic income wage, you pay 10% capital gains tax, which is pretty good because normally you would pay 20% on any income you would earn, so it's actually lower. And if you are on a higher tax bracket than the basic tax, you basically pay 20%. So that's even better because you're either going to be 40% or above on your normal income tax. So having capital gains tax is actually pretty good because it's a lot lower than what you would pay on any day job you would do. You know, normally if you're basic, you pay 20%. If you're on the higher one, you'd pay 40 or above. So capital gains tax is a lot lower in doing investments. So when you look at the whole system, the best thing to do is, first of all, open an ISA, invest in your ISA, 20,000 in there, you don't have to pay tax on anything on there. Once you get out of your ISA, then you're going to have to start investing where you might be having to pay some capital gains tax. But once again, don't worry too much, you've got 12,300 cover there. So really, you know, when you think about it, you've got nearly 32,000 before you have to even worry about tax. But remember, on your capital gains allowance, if you do go above 12,300, that is when you do have to start looking at paying your tax, and those are the rates if you are looking to pay a tax. Like I say, it's a lot lower than what you would pay on your income side of it, which is really good, and that's why really you want to be investing quite a bit because you'll get taxed absolutely loads. Now, like I say, it can change every tax year, and one of the rumours is that on this capital gains tax, them 10 and 20% tax rates that are a lot cheaper than your normal rates are going to change to your normal income rates. We'll see what exactly happens there. But those are the two things that you want to be using most, thinking about the most, is max out your ISA. Once you max out your ISA, make sure your capital gains allowance, you use that very carefully because you've still got 12,300 to play with right there. And like I say, you've got nearly over 30 grand before you should be worrying about tax. But the good thing as well is, even if you're not at the point yet of paying any tax because you're not making over 33,000 in the stock market every year, the good thing is to start getting these habits where you are maxing your ISA out first, and then you're thinking about your capital gains allowance before you start paying tax. But overall, that's a quick summary. Hopefully you found it a little bit useful because I've had quite a few questions about this subject, and when I've seen other things on the internet, they sound like really, and even on YouTube sometimes they sound really confusing, but that little step process there should really help you and really break it down and make it quite easy for you to understand. So I hope you enjoyed it. It's been more of one of those education videos, so normally don't do amazing on the views, but recently it's been doing alright. I think it's because you guys have been smashing the like button, so thank you so much for that. If you do want to join my private stock market group, there's a link in the description to the Patreon, and also if you do want to start buying investing shares and making sure you're using ISA, then make sure you join through the free trade account. There's a link in the description, and I hope you enjoyed the video. Hope it made it a bit more easy to understand. Smash the like button, and I'll see you next video.